Welcome to the Commercial Cash Flow Show. Today we're going to be talking about asset management and property management. So stay tuned.
Propelio TV is sponsored by Noble Mortgage and Investments, Batch Skip Tracing, Think Multifamily, CreativeCashflow.com, and Life and Air.
All right, welcome back to the Commercial Cash Flow Show. I'm your host, Ronny Phillip with Kingly Acquisitions. Today we have the honor in having Neil Bertrand with Disrupt Equity Partners, and we're going to go deep into his 20 years of experience in commercial real estate. So Neil, welcome to the show.
Thank you for having me.
It's been an honor to work with you these past couple of months, so I'm really excited to have you on the show. I think you're going to add a tremendous value to our audience. And let's dive into how you got started in commercial real estate.
Okay. Began my career in 1996. When I met my wife in 1992, she was already in the business as a leasing consultant. Spent about 4 years trying out different career avenues. My wife suggested, get into property management, give it a try. You might like it. So I did, and just grew from there. Started on site, as an assistant manager. Within 18 months, became a regional manager. And since that time, I've worked with 4 NMHC top 50 companies, which are some of the largest companies in the country. I've been involved with assets in 9 different states: student housing, conventional, senior properties, new construction, lease up, renovation, rehab. Several years ago, transitioned to asset management and acquisitions for a private firm out of Miami. And of course, just recently partnered in with Ben and Ferris.
Yeah, and it's been amazing to see what kind of tremendous value you add to the team, because I think having an asset manager in place is really, really important, and that's what sets us apart from most operators, I think, is having you on our team. So let's dive into what property management is and then what asset management is, because I think these 2 key things are the most crucial thing in multifamily. So I want the audience to know what the difference is.
Yeah, property management can make or break your asset regardless of how comfortable or confident you feel. I've seen it firsthand, taking over assets from bad management companies. The asset manager obviously functions behind the scenes, keeping an eye on the property management company. Property management companies kind of handle the day-to-day, marketing, leasing, care of the property, the accounting aspects, making sure your payables stay current. Whereas the asset manager has weekly calls, kind of deep dives into the numbers, tracks the trends to make sure everything is going north instead of south. If trends are headed in the wrong direction, you work with the property management company, formulate a game plan to stop that, and just deep dive into the financials, kind of looking for every little thing, right?
Yeah, so what are some things you look for in a property management company when you're hiring them?
Experience, length of time in business. I'll go to the Facebook page and read reviews for the properties they manage, read reviews on the management companies. I'll search for whether or not they are involved in egregious lawsuits or have been, and call people that they manage for already. Those are some of the things. The experience of the executive team. Who's going to be the regional manager and what their background is, how they vet their employees. Are they doing skills testing? Making sure they're bringing in quality people.
Yeah, I think definitely having an extensive interview process with property management is really important, because they're the boots on the ground.
Yeah.
They're the ones operating the property day to day, and I think one of the things I've done in different markets is I secret shop buildings and see how they operate, right? Like people would know, like if I go to, like a completely different market that I'm looking to break into, right? secret shopping the deals and just see, are they standing up whenever a potential resident walks in, right? Because I think how you do anything is how you do everything, and that's how we keep tenants in place. And how do they create the, like what Kenny likes to call the stickiness factor, right? Like how do you get people to stay, and create that community, right? Those are some of the key things I've seen in property management. What are some red flags or things to watch out for whenever, from an asset manager standpoint, for property management?
For property management, it boils down to people, product, price, promotion, and pride. So, you want to make sure that all the right people are in place, that the asset, social media is good, the right advertising is good, and it's in place. If you're looking at weekly reports and you're paying $599 for advertising that's not bringing in traffic, or is bringing in traffic, but you can't close it or don't close it, it's time to focus on a different marketing aspect. Making sure your rents are right in line with the market, knowing your asset well enough to know if you can be at the top of the market or if it's better for you to kind of sit at number 2 and follow the price leader. I like sitting behind properties that use revenue management software, because they will always be at the top of the market and you can coast behind them without spending $2.25 a unit, right?
What is revenue management software for the audience? Like
what revenue management software does is it accumulates data from the subject property and surrounding properties and looks at your exposure, looks at your lease expirations in the system, and will change your rates really daily to maximize them on new leases and renewals. What this does is the system is not set up to do concessions, so you're not having to give away money. You'll adjust the rents accordingly. So say if you have a 2-bedroom unit, 1,000 square foot, and you've got 36 of those on your property, but you have 12 either available or coming available, you've got that exposure, the software will adjust rents accordingly so you can lease those quickly. Its objective is to minimize the vacancy loss.
Yeah, I think technology is playing a key role, especially in multifamily. What are some things you've seen property management companies from 20 years ago to now? Like, what's been the key differences?
The technology, responding quickly to both negative and positive reviews, using lead tracking software that integrates with their system. We live in a world now where people don't return phone calls, they ignore emails, but they'll read a text. So there's a lot of software out there that integrates with the property management software where you can directly text someone, remind them that they set an appointment to tour the property, follow up on the status of an application, and people respond faster. So technology's been the big driver in actually improving the quality of property management. Also, the requirements. 20 years ago, there was not a high demand in certain positions for a certain level of academic achievement, and that's changed. You now have property management companies that are requiring their on-site managers to have college degrees. So it's really become. It's always been a professional industry, but it's grown with the use of technology, with higher vetting for quality people.
Yeah. What have been the key differences from back then until now? Like, we see technology change, right? Like, say like in 1996 when you're on site, right? What was day-to-day look like for you?
There was a lot of manual entry. Mm-hmm. That kept you behind the desk. There was a lot of Excel reports that kept you behind the desk. Now, you don't have that. You can auto-generate reports. Your managers have more time to go and walk the physical asset, look for potential issues and liabilities. So it frees up their time also to be in the office working what we call double close on traffic, which is where the leasing agent is working with someone. They're shaky about leaving their deposit and application, filling out the application on site. So the manager comes in, joins the conversation, and works a double close.
Yeah, I've seen that before when I was secret shopping for us in a market in Texas we're chasing after, and that's exactly what they did. Was they had the leasing agent, and then I said I was a prospective tenant, and I was moving there for work. I always make some sort of fun story, like I'm an engineer, or something like that, just to make things fun. And I started asking all these different questions and stuff, and then the property manager would come in and try to close, right? So I think that strategy is really, really interesting, because it's all about retention, right? Like you can schedule tours all day, but if you can't get people to sign leases, then it's not really efficient,
Yeah. One of the other key differences in technology is on the maintenance side. I'll give you an example. Many of the software, Yardi, RealPage, Resman, they have a system where you can map out your property and do preventive maintenance on your AC units, right? Coil cleans, freon level check, filter changes. So what you do is you take building by building, or whatever you can do, evenly distributed over a 12-month time frame. The system will actually generate at the first of the month automatic work orders. So then your maintenance team is going out there doing that preventive maintenance, and you have a way to track that. You have a way to make sure it was done, work performed, and it was closed out in the system. One of the great benefits of that is, every summer as the AC hit, your maintenance guys are getting $300-400 of overtime, answering all these after-hour calls. So when you maintain the systems, it reduces the after-hour calls, it reduces your overtime, and it reduces your maintenance, because now your systems are functioning better, right, without all of the issues. Implemented that with one company, and within 18 months, we saw a 33% decrease in the after-hour calls for the AC, and roughly, a 35-36% decrease in our order for AC parts.
Yeah, I think maintaining properties is really important. Let's talk about what a property management team looks like, for say someone doesn't know multifamily, they want to get started, right? What should property management teams look like in different levels, like say under, 50 units, then 100 units, and 200 and up, right?
Sure. So typically for anything below 90 units, you're not really going to have the income to support an on-site staff. So those companies that specialize, their staff's going to be at the corporate office, right, or one location. They're going to schedule tours, meet people out there, schedule maintenance. Me personally, I'm not a fan of those smaller properties. You don't get the economies of scales. One of the things I've seen is the maintenance guy gets called out. You're billed to $27 an hour for them to go out there. If they don't repair something correctly and are called back out, well, the management company's going to try and bill again for that time. And no, it should have been repaired right the first time. So, you want to make sure when dealing with those smaller properties that they have the qualified maintenance team and enough maintenance team to handle. They may have 50 units here, 35 there, but they may be overseeing a total of 2,000 units. So they have to be really, really stacked on their staff with, managing for a regional manager or a property manager in larger multifamily. It's a completely different game than a regional manager and a manager in this case overseeing hundreds of units scattered throughout the DFW Metroplex.
Yeah, I think smaller deals is not the way to go. If you're going to do your first multifamily, do a big deal first.
Yeah.
Because it's honestly easier, because some people I've seen is like, yeah, I want to do my first deal. Like, let me do a 12 unit or a 30 unit or something. I think you should focus on 100 plus units. Kenny's criteria is 75 and up. I think 100 plus units is really solid because you have those economies of scale, So don't do anything, in my opinion, under 100 units. And what are your thoughts on that?
I agree. Like I said, you don't have the economies of scales. You don't even have the oversight. Property manager, 200 units scattered across the Metroplex, they're not able to get out and thoroughly walk every property. The maintenance guys, the maintenance techs that go out there, they're getting that work order done and they're on to the next deal. They typically don't take time to walk around and make notes of things that seem that are out of order, unless it's a big issue like they see a leak. But they won't get the hanging gutter, right? So that's the big difference there. When you scale up to 100 plus units, the key thing when you're visiting with your property management company, choosing one, that regional manager. So larger multifamily, it's not necessarily the number of units that a regional has in their portfolio, it's the number of assets. And you'll notice if you visit with property management companies now compared to 10, 15 years ago, the regionals have fewer assets in their portfolio because investors have gotten more sophisticated, they've gotten more knowledgeable. And when I say that, I mean kind of the one-off investors, guys like you and I. So they've got to perform, at a higher level. So the regional manager's got to be able to focus more attention on each asset. When I became a regional, I had 9 properties in 2 states. As I went on and things changed, I'd have 4 or 5 in DFW, and then someone else is handling New Mexico or Arizona. Much more boots on the ground from that level. A good regional is kind of the second set of eyes for their manager. Managers kind of get in that day-to-day groove, right? They go out, they'll walk the make-readies to make sure they're quality and ready to move into, but they have busy days, so they get in a bad habit of walking with blinders. So it's the regional's job to go out, walk the property. It's the regional's job to go in, check all the applications, make sure that the people being screened are actually qualified and approved, and that manager's not just trying to boost that occupancy with what I call fool's gold, someone who's not qualified. For the on-site team, you want a level of experience that's going to match the unit size, the property size. On a 120 unit deal, I feel more comfortable giving an assistant manager an opportunity to move into a manager role at that size compared to a 300 unit property. I want a seasoned manager who's been on properties that large. They have a larger team that they're responsible for, that reports to them. More residents, you've got a lot more to work with.
I think realizing, being very specific and, hey, how many units y'all manage, 100 to 200 units, and then 200 to 300, right? Because there's different levels of experience, right? So I think seeing what these property management companies can offer, right? On, say, like a 200 unit deal, how much staff do you need?
Yeah, the rule of thumb that I was trained with is 1 person per 100 units. Now, over the course of time, there's a bigger difference between a 60s vintage versus an 80s vintage. 60s vintage will typically have a boiler, chiller system. It's usually it is a Class C deal, sometimes a rougher demographic base, so you may need 3 guys outside as opposed to just 2. But you can, with a strong manager and a strong assistant who's also functioning as your leasing consultant, that's good for the office. So that's kind of the rule of thumb. The standard is 1 person for every 100 units. But again, depending on the age, depending on the location, you have a property that's on what I call apartment row, it's going to get more traffic. So then you have to look at, do you need a part-time leasing person or do you need a full-time leasing person? Some of the things I do is I track from the property management reports the traffic, call volume, foot traffic by day. And there's always going to be a trend. A Wednesday could be your busy day. So we need a part-time person who's going to be there Tuesday, Wednesday, Thursday. When's our assistant off because they work Saturday? We need that part-time person there to cover the spot. So there's a lot of variables involved. Even when you're in property classes, A, B, C, you've got to have the staff that can interact well with the residents, right?
Yes.
Across the board, you always want to treat everyone with respect, regardless of whether they pay $1,500 for a one bedroom or $600. At both spectrums, into the spectrums, that's a significant chunk of their income, right? On the property management side, and even we as owners and investors, we provide the residents with their single largest expense and their most precious expense. It's their sanctuary, it's their home.
Yeah, I agree. So we're gonna take a quick break. When we get back, we're gonna be talking about asset management and why that's important. So please leave the questions and comments flowing, and stay tuned.
The Propelio Academy, an all-in-one education resource for training in wholesales, subject to wraps, short sales, flips, rentals, BRRRR, property management, and more. Go to propelio.com/academy to get your scholarship today. Propelio.com. What does Propelio offer? Lead generating websites, access to true MLS comps, off-market lead lists, and deal alerts. Get them all today at Propelio.com.
All right, welcome back to the Commercial Cash Flow Show. We're here with Neil Bertrand with Disrupt Equity, and we're talking about property management, and now we're going to talk about asset management. So definitely leave your questions and comments below. We'd love to answer them. So we talked about property management, what it takes, all that. Also, I want one key thing to add, right? When you're interviewing a property management company, you have to see what their experience is in the Class A, B, or C space, because there's different levels. You don't want a Class A management company to manage a Class C deal. It's just not going to work, right? So. Right. I think those are the different things. Also, unit count. If they're too big, right? I'm not sure if that's the best. What are your thoughts on that?
Well, those, and that's an excellent point because, give you an example. When I was doing asset management before Disrupt, we interviewed a company in Houston, large Class A portfolio. Those deals were B+ and C-. The one question that they really couldn't answer was, how are you going to manage the B and C deals when your background, your experience as Class A, the people you bring in that you hire are vetted and experienced for Class A. Typically, as bad as it's going to sound, the people that love to work in the Class A space, they don't want to go to the B and C.
It's just different skill sets,
Yeah.
I think that's key, right? Because it's like I honestly think it's much different between both, right? And different type of hires, different type of backgrounds, different things like that. There's so many different factors when it comes to hiring. So
yeah, and in terms of unit count, and there is economies of scale the larger a company gets, but the smaller companies, 5,000, 8,000 units, 10,000 units, and I can tell you this personally from spearheading and doing a startup management company, the relationships you make with those vendors are going to earn you as good of a discount as being with the Lincoln or an Ambling or a Letic, right? You've got to nurture those relationships.
Yeah, I think vendor relationships, that's another key thing to look out for property management is what is their vendor relationships like? Are they going to fit your needs? What is their experience in like big turnaround rehabs, right? Or are they, you get what I mean? So I think those are the different key aspects. So let's dive into asset management. Kind of explain to the audience, what is asset management?
Okay. The asset manager, as I mentioned earlier, functions behind the scenes, reviewing the financials, keeping their pulse on the property management company. There have been times in the past where taken over properties and, the property management company really didn't have their arms around the deal. The regional wasn't involved, the manager hires weren't correct, and when we're working with guys like you and I and Ben
Yeah.
and Ferris, right? We're 4 guys. We're a team of 4 guys. We're doing everything. We're sourcing deals, underwriting, raising equity, and it's very easy to lose track of what the management company is doing because you have to put so much trust in them, right?
Mm-hmm.
So one of the most important things that an asset manager can bring to the table for you is, you'll get to a point on your own where you get 8 deals, 6 to 8 deals. Now your time is so consumed managing the management company, it's taking away from sourcing deals, broker relationships, underwriting, networking for that equity. So it brings you to a standstill practically. Yeah. So bringing in, partnering up with a good asset manager, they take over that role. Now you're free to do what's important, right?
Exactly.
The asset manager is critical and it's very important, but you can't grow unless you're functioning, focusing on raising capital.
Yeah, I think the team model is what's made us successful, so far. Because if you can build like a strong team, we all have our different skill sets. Your asset management, underwriting, and we all can do these things, right? But who can do it the best, right? Mm-hmm. So underwriting, asset management, you have the 20 years experience. Ben, Ferris, and I, we're sourcing deals, we're developing relationships with brokers, we're networking, we're raising equity. So there are so many different key aspects. So whenever you're investing passively in a deal, you have to see what the back end is of the asset management, because people say they're asset managers, right? And how much time are they actually putting towards asset management?
Right.
I think that's super important, because there's a lot of part-timers in multifamily, which I don't really think that is efficient in the long run, So I think having people who are doing it full-time, like us, you're going to have more confidence in investing your money with people who are doing this full-time, So I think that is key, because a lot of these programs will tell you like you can do this part-time, but if you want to build a real company,
yeah, and
like a real acquisition company, you want to be top 50 in the country and scale up to 10,000 units, like you cannot be doing this part-time.
Mm-hmm. Well, if you're passive,
yeah,
definitely. But if you want to syndicate, be a deal sponsor, and grow, it requires 100% of your attention.
Mm-hmm. And I think that's key. So whenever you're a passive investor, that's something to look out for. What are some questions passive investors should ask a deal sponsor that you've seen?
Definitely the experience. Each member of the team collectively, how well they can raise the capital to ensure they close the deal, right? Because that's what we want to do. Have they backed out of deals? What markets are they focused in? For us, we're focused in primary markets in Texas, Georgia. We're looking in Memphis. We're looking in Florida. One of the things is the 3 of the markets we focus on have no state income tax and great reputations as being business friendly, so they're growing. I mean, if you look at the influx and how many people just Dallas proper itself has added, the growth has been exponential. So they're good markets. So you want to know where your sponsor is investing, right?
Yeah, and seeing what their track record is in each market,
right?
I think that's super important. And asking them, have they had any deals go full cycle, whether that's a cash out refinance or whether that is a sale, right? How did that do? What were their projections, on pro forma from the webinar, and then how did it actually perform? Did it perform well? Was it lower than expected, and why? Mm-hmm. And there's all these different factors I see, but I think asset management is key. I think people take asset management lightly, honestly. I think this is like, that's why having like you full-time on staff, managing the assets so we can do our best in sourcing deals.
Yeah.
I think that's important.
In previous conversations, I made the analogy that buying a property is like a woman giving birth. As an investor, you spend a lot of time nurturing relationships with brokers, with investors, sourcing the deal, underwriting, going through the process, it's your baby. It becomes your baby. You're in there, right? I can get emotionally attached to some deals. And what we do, I mean, let's be honest, what we do is we close that deal, we hand it off to a stranger, essentially, with no skin in the game, right? We're 4 guys, 1,200 units, 6 deals. The reality of it is, I know some management companies where one client's 70% of their portfolio. Who do you think is getting the lion's share of attention? Okay, that's just the way it is. A woman, pregnant woman, she's going to nurture her body. She's going to take care of herself, make sure she's taking in proper nutrients. She's going to give birth. She's not handing that baby over to a stranger and trusting that baby's going, that stranger's going to love her baby like she would. Yeah. But that's what we do. So the asset management is, like the camera monitor in that person's house, watching them and your baby 24/7.
Yeah, I think that is a great analogy, because if you're not actively asset managing, right? I see a lot of these different programs, right? Talk about how you can do it part-time, and it's just, you join a program, and they're great. I think they're great to start, right? But I think some people think it's easier than just you join a program, you find a deal, you raise money, and then you hand it off to the property manager. And if you're not really managing that asset, like overseeing it and studying the trends and all these different things, it could be detrimental to your investors, especially the first 6 months of takeover.
Definitely, and I've seen it happen. I've taken over deals from management companies that, it was crazy, some of the things they were doing. And it's really disappointing, having a property management background, to see someone whose level of commitment to stewardship was so low.
What are some of the mistakes you've seen asset managers make?
Asset managers can sometimes be too adversarial with the property management team.
What do you mean by that?
Okay, the bulk of asset managers don't have an operations background. They don't understand the day-to-day. So they're focused on the numbers. So a lot of times they're just so focused on driving numbers, they don't want to hear, or they just don't want to pay attention to what they're being told by the people with real experience. So it's got to be approached as a team effort. A lot of asset managers don't go out, in my opinion, don't visit the sites often enough. It's all about property management, asset management. It's all about boots on the ground. You've got to go out. You've got to see the assets. And for me, it starts when I go tour the asset for a purchase. It's just going to sound funny, but every time I go into a property, I ask to use the restroom. If the restroom's dirty and they knew somebody was coming that could potentially be their new employer, I'm not going to be too keen on keeping that staff. And it starts with those minute details.
How you do anything is how you do everything.
Right.
So I think that's key. I do that as well, just to see how they do things. That's a really good point. What other things have you seen on the asset management side?
Your traditional asset manager stays focused at the 15,000, mile level, focusing more on the financials and the numbers. Really, you've got to spend that quality time with your regional, with the on-site manager, having weekly calls. They'll get to a point where a property's performing so well, you can go bi-weekly, but you still need to review that report. And so some of the things we're looking for, you should look for as an asset manager, is your vacant ready, exposure by unit type, and rents against your competitors. So my goal is for the property management company in each unit type to maintain at least a 50% rent ready ratio. If people can see the exact apartment they're going to move into, they are more likely to lease. The more you have available to show, the faster you can lease. Ready dates, right? You can move in 3 days. You can move in a week, as opposed to this won't be ready for 2 weeks. That's kind of start at the top. looking at the exposure by unit type, and hey, do we need to not push rents here? Then the other the other train of thought for me is, I've got 7 notice to vacates. Let's test a push on these rents. We're going to have that availability coming up. But once again, you have to know that market as well as the property manager. You have to know who your direct comps are, and whether you can push rents or not. I really try to stay away from concessions. We'll not do any trailing concessions. If necessary, we'll do.
What is a trailing concession for the audience?
Say you offer a month free and you allow the resident to take that and prorate it over the course of the lease. If you go to sell the deal, like what I would look at is the concession burn off. Are we going to be 18 months into this thing before we close that gap? So that's what you don't want to have. And use concessions just to buy quick occupancy and cut it off. Right? A lot of markets are really strong. You don't need concessions, but sometimes you get into an asset, which is a great value add, right? And it's distressed. You're taking it over. It's 70% occupied. You want to hurry up and ramp up that occupancy.
What are some popular concessions you've seen here in like Texas, for example?
It ranges from $99 move-in, which I don't like because you don't get a security deposit. You have nothing on the back end to cover damages, to 1 month free on the first full month's rent. Those are kind of the 2 biggies. And so
I think concessions vary on between Class A, B, and C. I don't see it,
definitely,
concessions that much on B or C class deals, but on Class A deals, I've seen 6 weeks free,
yes,
an iPad, gift cards.
Well,
They're doing a lot of
where all
stuff.
the competition is. That's where all the new development is. I've heard of leasing agents, companies hiring leasing agents on Class A deals. New lease up at $50,000 a year plus commission. It's a very competitive space. The ironic thing is at the B and C level, that demographic is looking to get in for the least amount of out of pocket, right? But competition driven, demographic driven.
Yeah, I think definitely studying the concessions, like toured a couple deals, for us in a market and in Texas, and I saw a lot of concessions on B and C class deals. And then whenever I hopped on the phone with one of y'all, just saying there's a lot of concessions here.
Yeah.
This is some of my concerns and stuff. So because I secret shopped the deals, because I toured like 2 or 3 deals in that market, and it's very concession heavy, and it's a market I typically wouldn't want to be in if it's a B or C class. But having a guy like yourself on our team, you can deep dive into that market, with your 20 years experience. That's why it's important in partnering with people. So, what are the top things that investors should look for in an asset manager?
Someone who, like you said, knows the market, has done a deep dive on the deal. The previous company I was with, we dealt primarily with large institutional equity, the guys that write $20 million checks. You can't get on the phone with those guys and not be able to tell the story of the deal, not just the property, but the sub-market, the comps, what's happening in that market. Is there one of the things I look for is I have email updates in the commercial and retail space, right? One of the things that you want to find out with an asset is the retail around there 100% occupied.
That's very true.
Has ABC company just expanded their warehouse space or office space another 2,000 feet? Those are all key indicators about the area.
Yeah, even like our second deal, Marketplace Square, really, really solid area. It's got Starbucks, it's got a steakhouse, it's got retail development. Those are some key factors to look for, whenever you're going into a market. And then Stone Mountain's a different type of deal, right? But great location, great asset. You got to be very sub-market specific. Like, for example, South Dallas is different than North Dallas completely, right? But from an outsider perspective, say like a investor from California, or, say I'm looking in, Albuquerque, New Mexico, right? A market I've never been in, right? How do I know which side is good, right?
Right.
But that's why having property managers in place that know it, having partners that have done deals in it, because you can break into any market if you partner with someone with the right experience. You know.
One of the other, two things I also check are spotcrime.com for crime stats in the area. And people don't get scared when you see that little shooting icon. Drill down, see what the call was about. Sounds of gunfire. It could be someone 80 years old heard a transformer blew, or and call the police. It could be a holdup that was actually a burglary, right? Doesn't necessarily mean that someone was murdered. So drill down on that. Take a look at what type of crime is happening in the area. A lot of times I can tolerate a moderate level of crime. It's usually vehicle break-ins, really misdemeanor stuff, right? So spot crime, greatschools.org. The better the schools, the more people are going to gravitate toward that area. Plano is a great example. Plano is an established community, has the 80s build there, but has a great school district. So people are willing to pay more to get into that B property in Plano. So spot crime and great schools.
Yeah, and then I like city data as well.
Yes.
Those are all great things. Also, is another thing, as a passive investor, not to overanalyze this stuff, because crime can happen everywhere.
It happens anywhere.
Right? So it's just really having that level of trust with the deal sponsor, and making sure they know that area well. Because that's what we're here for. We're experts in identifying markets to invest in, because we don't want to buy a deal in a bad area. Right? That's just a headache.
Yeah.
You know what I mean? So I think looking in areas that are a path of progress, where there's a lot of things going on. It could have been, for example, Oak Cliff. It was the hood 10 years ago, or 20 years ago, right? But now they got Bishop Arts and all this kind of stuff. It's really trendy now. So it's crazy to see how that's changed.
Yeah,
but,
and even analyzing, areas like that are essentially gentrification, right? Bishop Arts is now butting up against Kessler Park.
Yep.
And a lot of things are being pushed away out of that area. So it's just knowing the neighborhoods, knowing the trends, knowing what's happening.
Yeah, I agree. So we're going to take a quick break. When we come back, we're going to dive into some cool stories of what Neil has been through this past 20 years, some funny stories, things like that. So keep the questions and comments rolling, and we'll be back.
The Propelio Academy, an all-in-one education resource for training in wholesales, subject to wraps, short sales, flips, rentals, BRRRR, property management, and more. Go to propelio.com/academy to get your scholarship today. Propelio.com. What does Propelio offer? Lead generating websites, access to true MLS comps, off-market lead lists, and deal alerts. Get them all today at propelio.com.
Welcome back to the Commercial Cash Flow Show, here with Neil Bertrand with Disrupt Equity, and we've been diving deep on property management and asset management. We talked about all the different things you should look for in both, and now we're going to dive into some of his real life experience. So what are some cool stories you can share with our audience on what's like a crazy story you've seen?
There's several. Some I can think of off the top of my head is I had a property in Fort Worth, and the manager calls me and says, there's a gazelle head in the apartment. Resident left behind. I'm like, throw it away. She goes, no, you don't understand. It's not a stuffed and mounted gazelle head. It's a severed gazelle head.
Oh my gosh.
That was one. There's
So how'd you manage that?
You just have to go throw it away and, try to get the blood stains out the carpet without having to replace it.
Oh my gosh.
That's probably one of the just ones that stand out. There's also tragic things that happen. People pass away. People take their own lives. You've got to deal with the families compassionate, in a very compassionate manner. But most of the times, it's a very interesting business. I say, property management, asset management. You've got to be the property manager, a financial counselor, marriage counselor, babysitter. There's just, a lot that goes into it. Had one property, a little rougher deal, where we had a guy that had warrants out for his arrest, city of Dallas, Denton County, Garland, and he was not a good guy. And police contacted us, and we know he's there. We had kids coming in and saying, hey, this guy told me not to say he was here. He's going to hurt my mom and dad. The story gets funny as we go, but finally, they converge on the property. They get this guy. He's in a second floor apartment, jumps out the window and lands, breaks his shin, and looks up to about 6 guns in his face, right? And they haul him off. So unauthorized occupant, we send that resident a notice to vacate, and she comes in with this great story. She doesn't know him. He just knocked on her door and said his mother had kicked him out and he needed to take a shower. And it's like, so you let this complete stranger in your house with 3 children to basically get naked, right? You don't see anything wrong with that. She goes, well, I'm just a good person. I want to help people. I'm like, you might want to start looking. We just are not going to let you stay. So.
Yeah, that's pretty crazy. I mean, there's a lot of different things that can happen on properties. The main key is how you handle it, right? Whether it's unfortunate events or bad tenants or anything like that. How do you attract good tenants to your property?
You have to know where the market. The first thing is having a really tight qualifying criteria, 3 times the amount of rent, which misdemeanors you're willing to work with, how far back you're willing to go on those things, rental verification, employment verification, and really it goes to where you market. You can use certain marketing types that will generate, literally in a month, that one marketing type will generate 100 pieces of traffic, but you may get 2 qualified people. So you have to weigh that against, is it worth the cost? Is it worth the $400 a month to get $1,200 in rent and deal with all of this unqualified traffic? Yes or no, kind of depending on where you are occupancy-wise. It's really where you market, knowing which businesses are around you. Obviously, the leasing person is not going to be able to get into a Walmart distribution center, right? But you can go through your resident base and your demographics, if they're being placed in the system right, see where your people work. Are they people that come in and they love you, and can they get you in to HR? And can you create a preferred employer program for that company? We had, speaking of our Georgia properties, we're cycling out some of the bad people from takeover. The manager is just really, really on top of it. I really like her. She went out to the medical centers, the hospital, and is marketing there. How much do nurses make an hour, right? So that's a great place to market, because we are improving that property very much. I mean, significantly. We are creating a great environment for families to live in. We are weeding out the people that were there, at takeover. So she's gone out and she's found a great source for that quality traffic. So those are some of the things that you do.
Yeah, I think having managers like that can help the property go above and beyond what our projections are, right? I think another thing is like online marketing. I think that is key. If you can have like a online friendly, where there's like a Matterport, 3D tours, different things like that. I think that helps not only save time, but saves money as well. Because people can just tour online and then maybe do one quick tour, they already see it, sign the lease, right? So it's all about the efficiency.
Well, and again, in attracting quality residents, it goes back to the on-site team. I remember as a regional, it was employee review time, so I sit down, I start with the porter, the groundskeeper, right? A lot of people look at that as this guy picks up trash. I asked him, why do you think people turn into this property to lease? Why do you think they come in here to get information? And he's like, well, it's a pretty property, it looks nice. And I said, no, you're responsible for that. You keep the property clean, you keep it well maintained, it looks great, it's just the grounds are impeccable. People wouldn't turn in if the place had trash all over it and looked bad, and the people that did turn in, that's how they live, and they're going to trash our apartments. So every position is important for attracting that quality resident base. Yes, even down to your porter.
Yes, I agree. What are some of the top operational tips you have for deal sponsors?
As far as once you get past closing that deal, bring in a quality asset manager. I have the weekly sync with our management companies. Then Ben and Ferris and I have another weekly sync, so they are in the know on what's going on. They're not on every email with the property management company, but a great tool that we use is Asana. We drop everything in there. I'm on the phone with the management companies, and I'm not handwriting notes. I'm dropping it in Asana. Ben and Ferris can see it, and so when we get on our call, we're just going property by property down the list in Asana. Here's what's going on. Here's what you need to know. Here's a big ticket. Here's something we need to talk about further. Here's the status update on this. Ben and Ferris and you, because you guys really focus, in this team, you're 75% of the equity raise. You've been in Ferris, about 25 of it, right? Yeah. I want you guys focused on that.
Yeah.
So, giving you guys that update, letting you know what's going on, that's what you need. Deal syndicators, you guys, you don't have to be chest deep in it, right? But you got to have somebody you can trust that will give you everything, good, bad, and ugly.
Yes, I agree. You can outsource that and learn. I think that is key. Because I've learned so much from you. Beyond what I can imagine, just with your asset management experience, and that's why I wanted to bring you on the show today. Is because if you have a good quality person and great quality people on your team, you can go much further than you can possibly imagine. So any final thoughts?
Just when you're a syndicator, when you're starting out and looking to build a team, talk to different people, right? Find people who complement your weaknesses. I mean, between you, Ben, and Ferris, you guys you've closed deals, you've raised the equity. That's things I need to improve on, right? So you're when I'm talking to brokers, when I'm talking to passives, you guys are my ace up the sleeve, right?
Yep.
When they ask, what have you done? I'm like, oh, here's what my partners have done, right? It's
Yep.
a great track record, and vice versa. But you've kind of got to try and work with a few different people to see if it's a fit, because it's not just all business. You have to have the same philosophy. You have to have some of the same ideologies. Yes, what you, Ben, Ferris, and I are doing, we're making money, right? We're creating wealth. We're generating a future for people, but we're taking properties that were rough, we're turning them around, and we're creating an environment for families. And the families see that, and they're willing to take the larger increase. So aligning with people who share the similar vision and similar philosophy is great.
I think that is absolutely crucial. So if you are taking notes, make sure to write that down. Having the same mission statement, having the same core values is important, and making sure the goals are aligned, right? Whenever started working, with y'all and partnering with y'all on deals, our criteria is pretty much the same thing. Mm-hmm. So it only made sense to continue partnerships and stuff like that. That's why having that complete alignment, right, is super important. And we're very opportunistic too. Mm-hmm. Like if we have a deal, right, and it's supposed to be a 5 or 6 year hold, and then someone just gives us a crazy offer, Yeah, we're all willing to say, yeah, let's either
Yeah.
cash out, refinance, or sell, right? Like, we're not married to deals, right? But I think making sure that interests are aligned, because like some sponsors are flippers, right?
Yeah.
In and out in 18 months, bridge loans, that type of stuff, right? And that's great, right? But having, and then some are super long-term holders, and then we're kind of like in between,
Yeah,
you know?
yeah.
So it's just making sure you have that alignment of interest. So we have some questions on this. So Ed Chambers asked, there's student occupied apartment complex near me that seems to be fairly newly built. Landscaping is terrible though, weeds up to the waist. Is this a good sign for a value add property? If so, what would be your approach? Start secret shopping? Neil, how would you answer that?
So I spent several years doing student housing, new construction, and lease up. What you have there, the property's fairly new. It's not a value add play. What you're looking at is a couple of things, probably poor management or an owner who's basically taking as much money as they can and not funding the property to keep those things going. So you've got a value add play. Ed, I don't know if you've done student housing before, but one of the things to take into consideration with a student housing property is your insurance is going to be higher. Student housing, senior housing for insurance companies is a little bit higher risk. And then also you've got to be prepared to survive the summer slump, because they'll empty out and drop down to 30-40% occupied in the summer. And then you're floating, you're sailing the rest of the year. So not necessarily a value add play. I would secret shop. I would see how the staff is. I'm looking for my son. I'm looking for my daughter. Do they follow up? Did they follow up in 24 hours? That could be a key indicator on where their occupancy might be, even in a good season. Coming out of the summer, if you're not 95, if you're 88, guess what? You're 88 until next year, if you can recoup the following summer. So not a value add, but definitely sounds like some management efficiencies. Maybe the owner is just not funding the deal and taking care of it.
Yeah, I think that's key. And also, student housing is not something I focus on,
No.
right? I think the B and C class assets are more of a safer bet.
Yeah.
But student housing people can do well. So Ed, I would encourage you to find a big player in student housing and learn from them. If that's a space you want to get into. There's so many different types of operators, so it's just finding those key differences. Neil, what's the best way for people to reach you?
Neil, Neil, at disruptequity.com. If you have questions after this, just shoot me an email. Be more than happy to help. Don't mind taking time to help other people learn and grow.
Awesome. And also tell them about the event this weekend you're attending.
Yes, we've got a great event co-sponsored by Disrupt Equity, the MFIN conference in Los Angeles. Saturday, we've got some great guest speakers, including Neil Bawa, Ron Cleef, several other respected industry professionals. So going to be very informative, a lot to learn. Hope some of you watching this have already signed up. And if you're attending, please come introduce yourself to me. Would love to meet you.
Yeah, so that is June 22nd, this Saturday in Santa Monica, California. So it's mfinvestornetwork.com. Secret code is Ronny, Ronny. Be sure to grab your tickets. If you're in Los Angeles, there's no excuse for you not to go. I mean, this is absolutely the best multifamily investor conference I've attended. There's no sales pitch, there's no program to sell, and our co-host, Kenny Wolfe, is going to be there as well. You're going to hang out with my partners, Ben and Ferris and Neil. Get to ask them questions, get to interact with them. And so if you have any questions about multifamily, continue to drop them below. Let us know what topics you want to hear from us on the Commercial Cash Flow Show. We do these videos for y'all, so we want to make sure we can deep dive. So best way to reach me, I'm Ronnie Phillip with Kingly Acquisitions. We're a real estate investment firm that focuses on acquiring value-add apartment buildings. If you're looking to invest passively in multifamily, please reach out to me, send me a friend request on Facebook, shoot me a direct message, or you can email me at ronny@kingleyacquisitions.com, and we can schedule a time to talk about your multifamily investment goals. I'd like to thank Propelio.com for helping us host the Commercial Cash Flow Show. If you haven't heard of Propelio, the best real estate investment software. They have a lot of different tools for single family, and be sure to go to Propelio.com to check out that. There is also a meetup next month. It is July 9th. It's a Tuesday at 5 p.m. in Grapevine. We'll all be there, so be sure to check that out. We'd love to see you there. Also, the Multifamily Investor Network Conference is going to be in San Francisco August 3rd, so be sure to check that out as well. Secret code for that one is Ronny, Ronny. Be sure to come hang out with us in San Francisco August 3rd. And thanks so much for tuning into this episode of the Commercial Cash Flow Show. Wherever you're watching, please be sure to subscribe, and we'll see you next week.
Propelio TV is sponsored by Noble Mortgage and Investments, Batch Skip Tracing, Think Multifamily, CreativeCash.com, and Life and Air.
Thank you, everybody, for showing up to the Propelio event. We had a great time. It's huge, as always. We love everybody that came. If this is your first event, jump on Facebook, jump on YouTube. Let us hear it. Let us know what your thoughts are. We love feedback. Anytime we could do something better, we want to do that. If this is your second event, your third event, your 10th event, let us hear that too. We're trying to create a community here where everybody comes together. So thank you so much for being here, and we'll see you at the next one.